everyone. Thanks for joining our webinar. I'm Mitch Hahn, CEO of Nordens, and today we're going to talk about, as you can see from all the stuff that's gone out to you, what businesses can do as economic uncertainty soars. What I want to say before we sort of go into it, before I introduce everyone, is that just to make you all aware that this is being recorded, but we can't see you. Don't worry at all. So look, I'll get into it. I'll start introducing people. So we've got Joe. Joe's a director of strategic advisory. Joe is part of Nordens, and you've probably seen him before in our webinars, sort of when we were going through the whole COVID situation. I'd like to say we're in a better situation, but obviously we're still kind of around the uncertainty. So Joe will give his opinions, and we've got a lot to talk about with Joe. We've got Stephen Brewer. Stephen is also a strategic advisor at Nordens, but Stephen also heads up our sustainability area, and we're going to talk to Stephen today about lots of different things about going green and what you can do, and how sustainability is going to play a key role. And finally, our guest, Josh Levy. Hi, Josh. Josh is CEO of Ultimate Finance. Ultimate Finance are an asset-based lender, and they provide lots of flexible solutions to support businesses. So Josh is going to prove key, where we're going to talk about sort of interest rates, what sort of finance is out there. And I guess I've asked if we could kindly talk about the pound as well, because I think that's something that's and how interest rates affect that, and vice versa. So that would be interesting. Good. So I want to get started. I'm gonna open the floor to Joe. Hi, you there?
Yeah. Hi, Mitch. How you doing?
Good. So look, you were sort of proved key to not just us, but sort of business owners and a lot of our clients, as well as sort of other business owners during COVID, with you know, all the advice that we were giving around that and what you were doing with businesses. But what have you made on the last few months, and yeah, what's the outlook on it right now?
So yeah, as you sort of alluded to, you know, it's been a very turbulent couple of months, to say the least. You know, so many factors at play. It's really difficult for anyone to feel comfortable and stable at the moment. And the recent announcements from the previous government, subsequent U-turns, together with all the changes, the infighting, it's all led to the uncertainty and lack of confidence. You know, so it really isn't massively surprising that the UK market isn't particularly attractive at the moment, and is by default seen as a much riskier investment. All of that has contributed to the fall in the pound and led to the bank taking the emergency action that it did over the last couple of weeks. But one thing I think it's worth just touching on is that although interest rates are currently higher than they've been for some time, you know, they have been higher than this in the past. You know, between 2010 they were around 5%. Between 2000 and 2010, and as far back as 1979, you know, they were around 17%. So it's not the first time that interest rates have been creeping up. The same goes with inflation. Back in the 70s, it was around 24%. So I don't want to downplay the tough times we're in and the inevitable recession that's likely to happen. I do feel we're going to be in for a bumpy ride for the next 9 to 12 months at the very least. But it's just to sort of mention, we have been in difficult positions as an economy before. And from my point of view, with so many things that are outside of our control right now, it's more important than ever to be in the know and control the things that you are able to control.
Yeah, I think it's more the case of sort of the change, isn't it? That people can, the affordability change. I think that's where it is. I have no doubt that that interest rates, where they were sort of higher and inflation was higher, but it's the change of going from where we are to where we're potentially going to be in the affordability. So off the back of that, what sort of feedback are you getting from business owners that you're working with at the moment?
So I think from a positive point of view, a lot of businesses I feel have developed resilience since COVID. The ones that took advice and have put proper procedures in place, have good quality information that they can use to help make decisions, are up for the fight, so to speak, and they're prepared and they're ready and they're not too down about things. They're concerned, of course, like everyone is, but they feel like they can overcome it. The ones that aren't, however, are finding it really difficult. They're suffering, and those in specific industries are suffering more than others. And this, to us, is where sort of business owners are more at risk of burying their heads in the sand, so to speak. And that makes it very tough to help them, and ultimately will only make their position worse. And many business owners that I'm speaking to right now have their finger closer to the pulse of their business than ever before. And they've really made big efforts to understand their customers, understand their team more deeply, entertaining collaborations, looking at pivot strategies. And all of these are likely to prove really valuable assets as we face the next lot of challenges. And I also feel it's led to a lot of business owners fast forwarding decisions they were perhaps stalling or waiting on, both positive and tough decisions, as everyone is just trying to keep pace right now with the ever-changing landscape. And I think just one final point on that is having an outlet where you can vent your concerns and worries and unemotionally sense check your strategy, your plans and your opportunities. It's really, really important. And one of the things, as you've alluded to earlier, that I was really proud of being a part of during COVID is how us and our team at Nordens were able to use our knowledge of our clients, their businesses and their numbers to sort of help paint that picture, to reassure them and reduce unnecessary panic. Because I think that's the big issue at the moment. There's a lot of panic going around. So I think we can all play a part in helping. And we can obviously do that from our financial knowledge and our knowledge of our clients' businesses.
Yeah, I agree. And I think sometimes it's not necessarily about the numbers. I think what you said, right, about business owners burying their head in the sand. And I think the psychological sort of aspect of this whole thing is and what the media do, it's crazy. And sometimes it's really, the only, people really struggle mentally with it. I mean, I know that, so, I deal with business owners sort of day in, day out, and it's draining. I mean, people are losing motivation. So I think what you said about actually working with someone and people that are building a team around you that are unemotionally involved, that can actually help you and help you see help you kind of see through the cloud, because you do get a cloudy mind. Even what we do, I mean, as business owners, Josh included, is I'm sure we work with other people and we talk to other people that can help us who aren't emotionally involved in our businesses, but can really help us psychologically through it. I know Josh and I got together for lunch at one point and we were just talking about our businesses and got some great ideas from each other. It really does help. So that's one bit of advice I would want to kind of, I think people should really, really understand and actually do that, actually go and find support, and people are willing to help all the time. Never be ashamed to ask for help. Thanks, Joe. I just want to go, you mentioned interest rates, right? So Josh, the big question, I'm gonna bring you in now, right? The current interest rates is no one knows what's going to happen. All we're hearing in the media is interest rates going up and up, and you obviously deal with this day in, day out because you're lending. But I mean, what's the reasons behind the interest rate, the fall of the pound, sort of the impact that it's having at the moment?
Sure. Well, firstly, thank you for having me on. As you kind of alluded to, Ultimate Finance, we provide asset-based lending to SMEs. We've got about 3,500 clients across the UK, about 300 million of funds deployed today. So we kind of cover a wide range of industries and different types of businesses. So like you, we kind of hear and get a real sense of what people are feeling out there. In terms of, Joe alluded to some of the more recent economic conditions and really the politics of it. But this rate cycle, when everything else has really been going on since the COVID support. So I think one of the big tools that the Bank of England deployed was monetary policy, quantitative easing, pump money into the system. For whatever reasons at the time, it was necessary to prop up parts of the economy. And this is a global phenomenon. You then had supply chain disruptions, the imbalance between supply and demand as production facilities basically stopped for months and months at a time, and demand moves up quicker than supply. And so there's been a real catch up that's been there, and that dislocation has not unwound quickly. And then you add to the mix all the geopolitical tensions, whether it's Ukraine or some of the things in the Middle East and the Far East, and it creates this toxic perfect storm. And we used the phrase perfect storm through COVID, and ironically that didn't turn out to be the perfect storm that everyone feared, where this kind of has a lot more elements to it. And central banks around the world, this is not just limited to the UK, have been trying to get on top of the inflation that's arisen from all of those challenges and features that I just touched upon. And the Bank of England first moved rates up in December last year. I think their initial plan clearly would have been to move slowly, but steadily upwards, and that's what they were doing. And then things have been on, I guess, an accelerated phase in the last few months. But in reality, rates are at 2.25%. They are going to be somewhere between, my guess would be somewhere between 3.5% to 4% by the end of the year. I think the current market projections are for 75 basis points rise next week, and then another one in December. of a similar magnitude. So you kind of have another 1.5% to add on top today. That's been partly a function of some of the political instability that was caused by the mini budget, but we're on this path anyway. And it may be that the peak rate ends up being slightly higher. And you've heard some interesting phrases recently, one of which was the moron premium that's been put on the UK by global bond market investors. And I think that's kind of played out into risk premium needed to basically buy government debt. And when the cost of borrowing for the government goes up, the cost of borrowing for everyone goes up. I think that's what we've been facing. But rate expectations have come down quite a bit in the last 2 weeks, as I think you probably would say grown-ups have returned to the room and the Chancellor's got on top of some of the challenges that are out there. And suddenly there's a bit more stability, even if it doesn't necessarily feel like that on the ground. So peak rate expectations have come down from about 6% to about 5% in the last 2 weeks. And that eventually, if that stays like that, will filter through into mortgage rates and other things over time. But we are basically back to where we were pre-financial crisis in terms of rate expectations. 5-6% has been the historic average forever, and it's been much higher than that. So I think we're just going back to, I guess, more normalized conditions, and have to recognize that the low rate environment, basically free money for 15 years, was not normal. And I think we've just got to get our minds around that.
So I guess two things I kind of want to ask you, but I'll start with, as you just mentioned, mortgage, because there's a lot of panic around mortgages, with percentages going up. I thought people have pushed themselves to the limit at a lower percentage rate. Now the rate's going up. So do you think it will ever potentially come back? Would you say that, or do you think that we're going to be stuck around that kind of mark for a long time?
So the way fixed rate products like mortgages are priced by lenders is with reference to their expectations for average cost of capital. So there's a thing called the swap curve that people look at, and there's a technical phrase, but essentially it's long-term expectations for rates. And if you're a mortgage provider fixing your rates for 2 years or 5 years, you need to know you're going to make a margin on that. So you'll look at where expectations are for average cost of capital and add a spread on top of that. So if the swap curve comes down and if rate expectations come down a little bit, then that will eventually filter through to mortgage rates. It's got to be consistent. I think what the mortgage providers have done is basically take the peak rates everyone's expecting and put their spread on top of that. So if average mortgage rates today are about 6.5%. If I had a crystal ball, I'd say there's a chance that over the course of the next few months it drops back slightly, but it's not going to be substantial, I think.
But what's interesting is that Santander have reduced their rates already, I think, to 4.9%, which is quite interesting. How it's gone up and then come back down. Is that due to sort of the government changing possibly, and sort of is potentially due to that?
It was. I guess it's the expectations of rates coming down has meant that they can price it slightly differently. But I think you've got to be careful with how you take rates to headline rates, because there'll be fees attached, and that may be for very low LTV borrowing. So someone's borrowing 50% of the value of a home. That's where you get the lower rates. But most people would borrow somewhere in the region of 75 to 80% of the value of the house, and rates will be higher because it's a higher risk spread.
Okay. So just a question that I get asked quite a lot is, when inflation kicks in, why did the Bank of England increase their the base rate? What does that do for the economy?
Very basic level, interest rates going up is meant to suppress demand. So if you think inflation is a function of demand and supply, and at the moment there's more demand for goods than supply because of all the supply chain issues that we've just talked about. And so by taking interest rates higher, it makes it more expensive to borrow money. And therefore, whether it's credit card borrowings, business borrowings, is less attractive to do so. And therefore, demand will come out. And so the Bank of England and central banks everywhere have been trying to reset the balance a little bit. So unfortunately, that will, and they've been quite clear about this, that will necessitate some level of pain being felt by consumers and businesses to bring unemployment up a little bit, I think, for them as well, but also bring demand slightly lower and just wait for supply to catch up. So it's a very blunt tool, and usually interest rates are most effective when it's a demand problem. You could question the effectiveness of rising interest rates when it's a supply problem, because just because rates go from 0 to 3 or 4% doesn't mean that you can produce things any quicker. You look at the energy crisis, interest rates do absolutely nothing to help with that. It's a demand problem, but so they're trying to reduce demand in the short term so that supply can catch up essentially.
Yeah, no, good. And talking of the energy, I think it's something I want to come back to with you, Josh, as sort of further on. No, that's really interesting. But I just want to bring Stephen in. So Josh just thanks, Josh. Sorry, Josh just mentioned energy, right? And at the moment, there's obviously a lot of talk around energy and green. But I guess with the cost of living and all these, with everything that's going on at the moment, there's a lot, green strategies, I guess, are becoming a lot less of a priority. And people are focusing on bottom line profit, and not just bottom line profit, but actually making sure that they're not losing money. So what's your thoughts on it? Because, you know, the sustainability is heading up the sustainability sort of a good sized business. I guess this is going to impact you as well.
Yeah, definitely. I think, well, first of all, Mitch, thanks for having me on as well. It's my debut on a webinar, so I just think I do sympathise with business owners quite a lot. Obviously, off the back of, you know, COVID-19, business owners are still in the recovery phase of that, and often, you know, still getting through managing the debt or CBILS or whatever they took at the time to just get through that period in time. A lot of them, you know, made a lot of losses during that time too. So they're coming from a position of, you know, trying to break even and now going to a profit making position. So it's quite hard to imagine business owners not now having to find more money for investment into green strategies. So again, like I said, I do sympathise with them. But if I'm thinking about profit targets, you can kind of look at that as a real short-term view. For the, you know, as a business owner, with everything that's going on in the world today, green energy is becoming more and more essential. So although the financial investment into green energy may hurt cash in the short time, I kind of encourage business owners to think more about the long-term impact. Think about it the other way around. Today we have limited control over our energy costs, which is already hurting our business owners' bottom line profit anyway, with overheads going up. Forcing you to consider your own pricing models to combat that rise and kind of mitigate that. So as energy costs rise, one benefit would be obviously is the payback times on implementing green energy. So I think perhaps we've finally arrived at the point in time where investment into green strategies is starting to make more financial sense. This should encourage more people, business owners, to adopt green energy. But I understand it's a kind of changing mindset. You have to get over the fact that your margins, your profit, your turnover may take a small hit, you know, initially, but the long-term implications of taking action now is going to have a greater advantage in time. So it's just trying to get past that whole mindset, I guess.
Yeah, I think we hear it all the time, don't we? Especially with everything that's going on in Russia and Ukraine at the moment, with like green energy and renewable energy and everything like that. I think that everyone's speaking about it quite a bit. And I know that sort of in a few minutes we're going to go through all the different things that you could potentially do and to kind of go into and to kind of adopt green energy. But just before we do that, Joe, I'm just going to bring you back because there's a new government, right? Well, I say a new government. It's the same government, just the new prime minister who's creating his new team. It's still the Conservative Party. So obviously the government have been supporting as much as they think they can or that they can. Do you think that they're doing enough to help businesses? I mean, there's a lot of industries that are struggling, and I wonder if, you know, you deal with all different industries. Who's suffering the most? Do you think? I don't know. What's your thoughts?
Well, I think it's a good question, and everyone's going to have varying levels of opinion on it. But I think, from my point of view, I think the government did a good job in communicating their support throughout COVID. I think we were all kept well in the loop with a completely unprecedented situation. The short-lived Truss government, if you can sort of call it that, have made, in my mind, significant mistakes in not just the planning, but just the lack of communication throughout this support, and we've all seen the impact of what that's done. So there's going to be an announcement, which I think was mentioned this morning, that's actually been delayed now by Jeremy Hunt. So it's not going to be made before the Bank of England get together to decide interest rates, which is a bit of a strange one. I'm not really sure why, but I can only hope that it's what they release off the back of this is going to learn from the mistakes that the previous government made and is going to be a real clear thought out, not just short-term plan, but a longer term plan with an actual clear explanation of why they've chosen the routes that they're choosing to get down to navigate this crisis. But you touch rightly on certain industries are finding it more difficult than others. And I think at the moment, I believe there's a bit too much of a blanket approach. There are certain incentives and certain things, but I think we can go further. And businesses with, different appetites, different demographics, I'd like to feel that they feel like they're being heard at the very least, because at the moment, it's always going to be difficult to please everyone. But I just think, if there's sound reasoning behind it all, it will at least go some way to helping people understand. I think the energy support they've put in place, although they've since scaled it back a bit, is welcome. But again, I think it all comes down to what they release and the reasoning behind it all, so people can actually understand. Because I think, as we've seen in the recent announcement, it was a very shotgun approach. This is what we're going to do, and it's going to be this great success. And then when people have kind of unpicked it very quickly, and they've realised that they've made lots of mistakes. So I just think it needs to be thought through and looked at from all angles, and that's what I'm hoping the delay in releasing this will be because of. They're just double and triple checking everything so they don't make the same mistakes. And I just think I think it's important, with everything that's so uncertain at the moment, to offer clarity. But I think it's time for the government to really get more industry leaders and experts more involved in the decision making, so they really truly understand the challenges that each industry is facing, and also the positive ideas and opportunities that certain industries and certain demographics have. I think throughout COVID, we saw a big increase in collaboration across the board, and I feel by working together, we will achieve much better results, and our country and our economy will be stronger for it. So in short, I feel that we need to double down on rewarding innovation. We need to reward expertise, and we need to reward positive actions, that things are being done for the right reasons. And I think that will ensure people and businesses want to remain and thrive in the UK for the right reasons. I honestly feel the government have a big job on their hands and a lot of work to do to win people over right now, given the mess that has been created up until this point. But I just think the first starting point is something presented in a way that people can understand and it actually makes sense. I think Rishi Sunak has the ability to do that. And I think it's like everyone, we're waiting to see what they're going to come up with. But without the reasons behind it, I think people are just going to be just as unsure and unhappy that they are at the moment. So I think the transparency is the most important thing right now.
Yeah, I agree. So just to, I guess, I have a question for you, and that's, what can businesses do, headline, just three key things right now to kind of almost protect themselves, or what they should be doing to protect themselves from the current economy.
Well, from my point of view, I think kind of three key things that scream out at me straight away is speak up, like you've mentioned before, and like we mentioned frequently throughout COVID, and it's always relevant, but it's more relevant now than it's ever been. Speak up, have an outlet as a business owner or as a team member within a business to speak to someone around your own personal concerns. I think it's very important that business owners look after themselves from a mental side and from a physical side. It always reminds me of when I used to get on, when I go on an aeroplane and the announcement comes through that they always say, put the mask on your children before yourself. And I used to think, wow, why do they say that? And I realized that obviously if you're not in a position to protect yourself, you're not going to be able to be or help anyone else to the right level. So I think it's making sure you're in the best possible state you can be to support and help those around you within your team, because they're all going to be uncertain and asking questions of you. So looking after yourself's key. Knowing where you stand, just as important. From a financial point of view, if you don't know where you are, you don't have any sort of basis to start. You can't make proper decisions. So I think it's vital that you know your numbers and you know what's going on. And I think making sure you're having conversations with your team members and your customers, it's so important that your team members have felt reassured about the situation, but also understanding how your customers' attitudes and appetites have changed in this tough time, because you might be blindly expecting your customers to act in a certain way, and all of a sudden, because of what's happened, they've now needed to pivot, and your offering now no longer serves them and they're going elsewhere. So I think staying close to the real key people in and around your business is vital. So I think that's 3, but yeah, they're the things that immediately scream out.
Yes, no, perfect. And I think just to quickly, for someone who's sitting there going, "Oh, I don't know where to start. How do I know how do I work out my numbers?" Because there are a lot of people that think they know their numbers, and they probably do know their numbers in their head, but they haven't actually put it down. Where do they start? What advice would you give to start? Apart from going to your accountant who can help you with it, what would you say?
Well, I mean, funnily enough, I think that would be the advice, going to someone in the know where they can actually critique it, because
Yeah.
we as accountants see things, and we in the finance world see things slightly differently. And what we've found over the years with business owners, they often gauge success and whether they're whether they're coping based on different metrics, profit and cash being one great example. They're not the same thing, and they can have a drastically different effect. So speaking to someone doesn't necessarily have to be an accountant, but someone in the know that can actually sense check your conclusions and the decisions you're making off the back of your numbers. But like we said, the first point starts with speaking up, talk, and people are out there to help. Like you mentioned before, people are more accommodating than ever to help each other, I feel. So I think you just have to know where you are. But obviously, as everyone on the call should know, and hopefully will know, that we're always around to talk to. So just speak up, whether it's to us or someone. That's the starting point. Do something, take action.
Good, thank you. Good advice. I just want to go back to Stephen, because Stephen, you're going to give. I mean, there's a lot of things that I know that's out there at the moment, and then we'll go back to Josh, because I want to talk to Josh about other things. So, Stephen, everyone's talking about the energy price cap. What does it mean for businesses? What's out there for businesses that you're finding? Both, non-financial benefits as well going green, which I think is important for other reasons. But what's out there at the moment to benefit businesses from a green perspective, which you mentioned earlier?
Well, I think first and foremost we'll touch on the energy bill relief scheme, which people obviously know as the price cap relief. You've heard that's come into play of this month. So the energy price cap commenced as of October. It allows some short-term relief for households. Just so in case you don't know how it works, there's no need to apply for the discount. This gets deducted automatically from your monthly bill and runs for the next 6 months. I think until March, April time is when it's going to end. At the moment, there will be a likely review, I feel, of this expected probably in the next 3 months, or maybe something will be seen based on what Richard Sunak comes out and says shortly, for any kind of future support beyond that timeline. But ideally, it's to get us through the winter months. So yeah, I mean, it's certainly a start to help people get through the current period. But for the government, they won't want a repeat of these types of interventions for the next winter. So I think that's potentially going to be something we see more of in the short term. But one key incentive that I want to discuss is the boiler upgrade scheme. Probably if you guys may have heard of it already. But this is a great green incentive for me, reading about it in more detail. So the government launched the boiler upgrade scheme back in April. People can get £5,000 grant towards the cost of installation of low carbon heating systems, such as heat pumps. Typically, systems will cost between 14 and 18,000, which is reduced to 9,000 and 13,000 with the boiler upgrade scheme grant. So a nice kind of a reduction on that if you wanted to implement that in your homes. You may also be able to get finance or support through various types of loans. I know there's not that many kind of green loans out at the moment, but reading on the HSBC website, there's what's known as the Green SME loan. So that's something to consider, because you can get funding up to around 25,000 at a competitive rate. So I definitely feel that that's an avenue to explore. With the heat pumps, they're typically 4 times more efficient than your usual boiler, 75% less carbon, and it's less maintenance. They usually last around 20 years, sort of supposed to last around 20 years, compared to a usual standard boiler that's 10 years. So the scheme's currently open. It runs until 2025. To qualify, you need to have an energy performance certificate from the past 10 years that demonstrates that you meet their installation criteria. So that's definitely something to consider, not just for homes, for offices, for anything that you think that could actually save money in the long term. Like I said, the initial investment, it's going to cost, but if you can speak to lenders and maybe be able to spread the cost, then you won't have to feel that kind of instant cash burden. In terms of non-financial benefits, which I think you touched on, people always need to think about the future, number one. So, and appreciate that non-renewable energy is not the long-term solution, and potentially things will only get worse, especially, you know, a scarce resource like oil. 50 years left maybe on the clock. We need to actually start really thinking about green energy more and more. So early adoption into green energy, your businesses for the future. Sorry. One other thing that I wanted to touch on was how it will affect carbon reporting requirements in the future. So that is a non-financial benefit in my mind, because if you can be an early adopter of green energy now, you're ready for when those types of things come into play further down the line. Also, you can be seen as a leader, a promoter of clean energy, which can generate strong partnerships in the future, like-minded companies, and, you know, just kind of helps protect your company's permanency. So yeah, those are the types of financial rewards non-financial rewards I see for the future. And I think as a result of doing those things, you know, money will flow. That will be a byproduct of being an early adopter into green energy. So
Yeah, I think thanks, David. I think I think it's important. I mean, as I'm looking at other companies that we work with, and Josh will probably be able to see the same. Probably Josh may even do it himself. But there are certain companies out there that will only work with you if you have some kind of green sustainability program in place. And that means sort of if you want to try and get on a preferred suppliers list and things like that, they will want to see that. Josh, have you seen that? I mean, you probably do it yourself.
I mean, there are some of those things around. I mean, some of our clients ask for, when we're proposing facilities and they've got other lenders to talk to, they do ask for our ESG credentials and to understand how we embed it within our business. It's very important. I think at the moment, it's generally used by lenders and other organizations as a positive. So there's incentives around sustainability and good ESG credentials. At some point, that will flip to the negative. So people will be penalized for not having, and that'll be the tipping point that comes at some stage. But I think everything that was talked about around green energy and sustainability is critical. But I think we shouldn't ignore the fact that there's things that can be done around efficiency of energy use rather than just having to invest in new and emerging technologies, because, you know, some of the things that we do with our asset finance facilities are funding things like electric vehicles and other types of, I guess, green assets, but it's also funding the purchase of new equipment that can maybe be a lot more energy efficient than, you know, previous models. And there's a lot people can do to look at efficiency of their energy consumption. One of the businesses that we are involved in, separate to Ultimate, so we sit within a wider family office structure, and we're a large shareholder in a pub group with 1,800 pubs and restaurants around the country. Our energy bill, just to put this into pound note terms, has gone from about £78 million a year to 150 million plus, and we're expecting that to continue rising despite all of the guarantee schemes around there. Some of the things we've been doing is, yes, around investing in things like solar and how that can, I guess, change the energy consumption mix, but also there's things that can be done around voltage optimization, having green ambassadors within different units. So the basic things like turning off lights, but also investing in LED lighting, investing in, you know, automated systems that turn off lights when you're not there, and fixing some of the kitchen equipment. So there's lots that can be done without necessarily needing to go the full way to investing something that's a bit new.
Yeah, I'm glad you said that, because the message I wanted to get across was that there's a lot of people that will probably think that, oh, you know, I just need to make sure I survive this period. I need to make sure I don't lose money through this period. You know, I don't need to worry about the green energy side of things. I just need to make sure my business is profitable and sustainable. But I think that's you know, hearing that, it just clarifies how important that this actually is. It's never been more important. And for a business like yourself, or a business that, you know, you just mentioned before about the pub group, I mean, that's life-changing for the business, really. I mean, green's never been so important for you right now.
Yeah, we work with quite a lot with property investors and developers within some of our bridging finance offerings. And at some stage in the next few years, the government have already announced that the EPC certification, basically, that measures the energy efficiency of a home, will essentially prohibit any landlord letting out a property if it's below EPC. And so it's going to force everyone to invest in upgrading the efficiency of properties around the country, and that will be a positive thing. But even today, as Stephen mentioned, the payback period on things like solar panels has gone from 10 years probably would have been a standard payback period to today. I would imagine it's closer to 3 or 4, and so it does pay to invest in this, as well as being something that is just being a good corporate citizen.
So it's turning into an even better investment.
It is, but people, as you say, cash is tight around everywhere, and so if you've got a choice between investing in staff, production, or an energy project that's going to come good in the next 3 or 4 years, it's very easy to focus on the short term and not worry about the long term. And I guess that's where taking proactive advice today is key. Knowing your numbers, as you said before, but knowing the cash numbers rather than just your P&L. Businesses fail because of cash flow rather than from profit. And so knowing where you are, investing in data infrastructure to have those conversations, and looking at your funding, where how effective is it to support your growth, your working capital cycle, your purchase of equipment. And there's lots that can be done rather than just thinking I need a loan. There's a bit more to it, and that's where hopefully you guys and your team play a huge role in being that advisor.
Well, I was going to kind of put you on the spot a little bit. I hope you don't mind. I can see the fear in your eyes. But how do you think accountants can help businesses?
So I heard a statistic the other day, and I haven't verified it, to take it with that in mind, that businesses are 4 times more likely to get a loan facility approved if they've worked with their accountant along the way to achieve it. Now, as I say, that came from a third party, so I can't verify it, but from a lender point of view, it's really important that we understand really what's going on in the business. We get full transparency, full information provided. These things always come out in the wash eventually. And the earlier and the more transparent and upfront you can be about it, the better picture you present of the business. And that's where having an independent source like an accountant involved in the process can make the difference between success and failure. And so I would encourage businesses, anyone that's listening, to have someone in their corner that can be the sounding board, ask the basic questions, and just provide that impartial view on what they're being told by anyone, by a lender or anyone else that may be out there.
Yeah, good. I like that, and I can see Joe and Joe nodding his head. So I completely agree. And I think we find the same. I think when we work with different lenders, the question, most of the time, unless they're working with us or our clients are working with us, they don't really get what they want. If they go direct, it just delays the process. Completely delays the process. And I think knowing your numbers and knowing what, and most of the time when people go direct, sometimes they don't, or a lot of the time they don't actually know what they need. They don't know what's out there. They don't know their numbers properly. So I think working with an accountant is just so key, especially in this sort of day and age. And I think accountants' roles have changed. We're not compliance anymore. Although we do the compliance, but any accountant that can't file a set of accounts, there's a major problem. It's more using accountants as advisors. And I think fortunately we've kind of done that throughout. And that's kind of what we've built our model around, is actually advising clients, not just sort of doing bookkeeping and accounts. I think you have to give the advice around it. And we've got such a great team of sort of advisors. That's kind of what differentiates what we're doing from a lot of others. But I want to keep you on, Josh, because what's out there at the moment financially? I guess everyone's talking about the banks and the interest rates and things like that. What's around, or how can businesses? Are the interest rates going up hugely commercially as well? What's out there for businesses at the moment?
The lending market has changed drastically in the last 14 years since the financial crisis. The financial crisis kind of fragmented the market more than it had done before. So before, it was dominated by the high street banks, and it was, you go to your bank, if you can't get a facility there, where'd you go next? There wasn't really many places to go. Since then, there's been a massive expansion of what I would call specialist lenders, of which we're one of them, but there's many others that look and do similar things to us. And I think the SME world is a lot better served by independent lenders. And I think, to say, the banks have acknowledged that over time, and there's now partnerships between banks and non-banks. And so essentially we're funded by some of the high street institutions who would rather put the money to us to help fund SMEs than do it themselves because of the cost to serve and the different risk profiling. You need to really get under the skin of things. You talked about whether a business is best served going directly to a lender or coming through another intermediary, whether it's an accountant, an advisor, a broker, whatever it may be. I think it's just helping someone navigate what is a very challenging market to understand at the moment. So it's about products, about rates, particularly as things are so variable and up and down in terms of product availability in some markets. It's important to have someone that kind of has a whole of market view on it. But there's so much out there. The funding market is extremely varied and extremely liquid. So I think whereas 2008 was a liquidity issue and availability of funds, today is more of a cost of funds problem. But actually, you have to think about what does that funding enable you to do. So it may be a cost on your P&L, but what could you not do without it? Whether it's investing for growth, pursuing opportunities, or actually just shoring up the balance sheet for survival purposes, and whether it's a simple loan structure and overdraft or some of the more specialist products that we offer, invoice finance, so taking cash today from unpaid invoices, so leverage against receivables. It's looking at how you take funding against asset purchases you may need to do or unencumbered assets that sit on your balance sheet. It's just the property side of it, it's stock. There's so much that can be done that can generate greater availability than just a loan that you may get from a bank or another institution.
Yeah, no, that's good to know. And I think for anyone watching, please explore those options. Speak to your advisor, speak to your accountant. Make sure you explore those options, even if you don't take those options. At least know, you've heard from Josh. There are things out there that can help you through it, but not just help you through it, but allow you to kind of come out the other side a lot more profitable and to kind of get, take you to the next level. A lot of people are scared. That's another thing, Josh. A lot of people are scared to take debt out at this current time. But I think that's, it comes from knowing your numbers and knowing what you can deal with and almost doing like a risk analysis and sort of affordability checks and things like that. But yeah, it's really interesting. Josh, just before we go to questions, what are your thoughts on the Prime Minister, what the financial markets are going to do in response?
I think I used the phrase moron premium earlier, which explains the last Prime Minister. That's not my phrase. And right now, the phrase that people are using is the dull dividend. So the markets are rewarding the new government, the new Prime Minister and his new team for essentially getting back to basics and having fiscal stability at the heart of it. So there has been an instant reward that's come in to market pricing. So long-term government borrowing rates have come down and all things like that. But there's tough times ahead. So they've really talked about difficult decisions that need to be taken on tax and spending. And I think there's a lot to happen there. Ultimately, the government have exposed themselves to the kindness of strangers. So the money that comes into bond markets to finance government spending is not just from taxpayers, it's from international investors. And they will go where they think their returns are highest and most secure. And so typically there's a flight to quality that comes in through uncertainty, which is why the US dollar has been so strong this year. And it's why, money has been flowing out of the UK in the last couple of months. And so hopefully some of that will come back and go to pricing. But I do think there are challenges for the government to navigate for sure.
Good. Yeah, no, I agree. But we will soon find out, right? Good. I want to go to some questions now. Thanks, Josh. I want to go to some questions that we've had come in. So I'm actually gonna start with I think this is probably one that's come in for both Joe and Josh. So question coming in, do you think the government will have to intervene if interest rates surpass 5%? Can mortgage homeowners really afford it? So yeah, Joe, do you want to?
Yeah, I think it's a very open, difficult question to answer, isn't it? I think until we see the government's plan, we're not really going to be able to sort of make a clear judgment on that. But I think I would say that should be the benchmark of the planning that they're doing, because that's going to be the biggest, aside from the energy crisis, it's going to be the biggest thing that will impact an individual homeowner right now, or a business that has a mortgage on a property, for example. So I think it's a case of, well, look, if they're looking at that with a both a short and a longer term view, I hope the plan that they put in place will enable us to see a way forward from that actually makes some sort of sense. Will they intervene? I think they'll try and do everything to avoid intervening. That's my gut feeling, but it may come down to it. So it really is a difficult question to answer, if I'm being honest. But my gut feeling is they'll put that as one of the benchmarks within their plan to test whether it actually works properly. But like Josh sort of alluded to on the interest rates, they look like they're definitely going to rise, but it looks like they may now, with some sort of solid government behind us with a clear plan, might plateau a little bit earlier than what we thought. So it may not be as bad as it could have been. But again, it's one of them where time will tell. They've intervened before, obviously, throughout COVID. They've intervened and got involved. They've intervened with the energy and gave support there. So they're obviously not adverse to doing it. Whether they will, I think they'll try and avoid that as being part of their plan. That's for sure.
Josh, did you want to add to that?
Yeah, I'm not sure much good can come from government intervention in money markets like that, and I don't think they should or will. I think, as I said, historic norms of interest rates have been much higher. Clearly, this is going to put pressure on homeowners and affordability. But when banks have been assessing affordability for mortgages for the last 15 years, there's been stress rates that have been much higher than rates that you've been paying. So they should already have been checking that levels will be affordable. Ultimately, it comes back to what the big problem is, which is inflation. So if that is the devil, then the government and Bank of England will do everything they can to eliminate inflation from the system, because that's the biggest problem facing everyone right now. And until that's under control, I think all bets are off in terms of everything else. And they will have to use the tools available to them, of which interest rates is one, to try and get a stamp on it. And they will. It will just take a little bit of time.
Yeah, one thing just to add myself. I spoke with a bank the other day, and what they've been instructed to do is if people if the mortgage sort of rates go up too high where people can't afford it, then they've been told to offer interest only for a lot larger amounts based on what they usually do. So to go interest only. So I think if anyone approached their lender or the bank to say that they want to change to interest only, I think you'd be met positively, and also extension of payment time. So if you're paying over 25 years, or you're sort of 15 years, or whatever you are, they will accept you extending it over a longer period of time. That's the feedback I've been getting from banks. So I think that it will be the banks potentially stepping in rather than the government, for possibly. That's my thoughts. But yeah, that's to answer that question. So just moving on, because I'm just a bit conscious of time. I can't believe I'm about to say this, right? But there's a question that come in to Stephen. I mean, it's makes me feel sick every time I say it. Shell announcing, Stephen, over 8 billion in profits, right? That's what I've been told. I mean, I haven't seen it myself, but I mean, just reading it. Do you think the government need to introduce windfall tax to support sort of the taxpayer struggling to pay their bills?
Well, potentially, yeah. I think it's a good question. And at the end of the day, the funding has to come from somewhere. You know, if we're going to be putting more into green energy, where's the money going to come from? So these big oil corporations arguably are, you know, they're the biggest contributors to carbon emissions out there. So I think that, yeah, I mean, it makes sense to me. So I just think, they're certainly capitalising on the current position. So at the very least, there should be some sort of cap on what profits they're realistically, or what they're realistically allowed to charge. So yeah, I mean, it would make sense to me, put it that way, for there to be a windfall tax brought in on those sort of corporations.
I would imagine that they probably. I mean, I'm seeing it everywhere. I get emails from sort of petitions all the time saying that they're trying to get a windfall tax brought in. So I would imagine that that's something they're going to look to do. Thanks, Stephen. Joe, question for you. I'm deeply concerned about my cash flow and business funding, but I honestly don't know where to start. What shall I do?
I think we kind of already touched on this one when we were discussing earlier, but in simple terms, just going back to, I think first things first, it's great that that person's spoken up. I think that's often the hardest thing. And then I think it's a case of one thing that all business owners really need to sort of drill down and double down on is, what they're in business for, what they're looking to achieve, because that'll frame the starting point to work backwards to where they are right at the moment. And then they can navigate the next stages through that. So once they're clear on what it is they actually want to achieve, then we can start painting the pathway. But again, that's where we can help with the numbers, because they paint a picture and tell a story. And that allows us to break things down into much more sort of bite-sized chunks that people can kind of understand and be more comfortable with. Because you know what it's like, we're talking about a lot of real short-term hurdles that we've all got to overcome at the moment, and it's very difficult for sometimes to see the wood for the trees. So I think it's a case of knowing where you want to go long term, which will allow us to start building that pathway towards that. But again, having a grasp on your numbers, you know, being open and honest, sharing information with people that you trust, it's the starting point. Otherwise, you're just going to find it so difficult to make any decisions that are other than just complete gut feel. So I think they're on the right track, but I think it's the next stage would now be working with someone that you trust to build that sort of longer term financial plan, and you'll quickly see where the pitfalls are in it, and then you'll be able to make decisions to pivot or adjust accordingly. One thing I did want to mention, it's not based on this question though, is that we've spoken about it before, Mitch, that although there are tough times ahead, I think that's quite obvious. I don't think anyone would dispute that, but there are also a lot of opportunities out there for businesses. And I think it's just worth mentioning that. It's not to sugarcoat the situation we're in, but we have seen it in COVID, and we will see it again, that businesses are able to thrive in these tough times. We've done a lot of stuff on R&D as well. That was one other thing I just wanted to touch on. That we've put together a lot of articles and information around R&D. It's one of the positive initiatives the government still have in place. So if you feel your business does anything that's research or development, anything that might qualify, it's worth having a conversation, because it is a lucrative tax incentive, and there aren't many out there at the moment.
Good, thanks, Joe. I think just to add as well, just if you're in that position where you don't know where to start, a good place to start will be just, you know, doing a forecast, right? Cash flow forecast, just doing them as a starting point, and then going to somebody who can really help you understand them and really, you know, work through. I mean, something we do is we stress test them, we do what if analysis on them. I don't expect people to be able to do that themselves. However, put your numbers together. If you can't sleep at night, and I've done it before, where you can't sleep, you start putting your numbers together, all of a sudden you start to feel better. And then with those numbers, you take them to someone who can help you understand them, and then start doing all the clever stuff behind it, which is what, you know, people study and have done for years and years for. So Joe, you put your hand up.
Yeah, sorry, I just thought while you were saying that, it just made me think about, obviously we've talked about doing forecasts for business, but I also think it's really worthwhile for the business owners to do a financial plan for themselves individually as well. So yeah, I just wanted to mention that.
Yeah, I agree. I completely agree. But I just want to go to one last question, just because I'm just, like I said, I'm conscious of time. So this one's for Josh. Josh, will lenders be offering lower interest, more attractive funding packages than banks going into the future? Very interesting question.
I'd say unlikely. So banks will generally have the lowest cost of capital because they raise their money from retail deposits, and retail deposits have, if you've seen over the last year, probably from your own savings account, have gone up less than other rates. And so typically what happens is pass through of higher rates to savings holders will be about 40 to 50% of the rate that goes up on loan products. So the banks get a cost advantage in good times and bad times, and so they should always be the cheapest typically. Other products are all, you know, cost of capital comes from either wholesale funding from banks, swap markets, or other similar institutions that may be out there. So it's unlikely that any lender that's a non-bank will be able to compete directly with the bank on rate. But then it's not just about cost of funds. So it's not just about the price of a loan or a facility. It's about the service that comes alongside it. It's about, does it work for you? Is it flexible? Do you have a relationship point that can help you, whether things are good or bad? Can you increase it? Does it grow with sales? There's lots to consider rather than just a headline rate. And often it's worth paying a bit extra to have something that's actually fit for purpose to enable you to grow the business.
Well, what I find with banks, high street banks, is that they tend to go through a tick box exercise, whether you qualify or not. And you've got a lot of bank managers, because they don't get to that point, but a lot of people that sit behind a computer that will determine whether you get something or not, with actually trying to understand the business and kind of what we're doing and what it's there for. So I guess what you're saying is, working with someone like yourself, Ultimate Finance, or working with Ultimate Finance, you really try and understand the business and find a solution for them and kind of help them on their growth spurt, rather than just tick boxing.
Yeah, it's just very different. It's a different model. Ours is a relationship model. A bank's is not necessarily, but they don't pretend it to be, and they give a very good service for.
You'd be surprised though.
corporate.
You'd be surprised. Some of them do pretend to be.
Okay, interesting.
But yeah.
But a lot of them are perfect for a corporate sized business where it's all about the cost of a facility. Whereas if it's an SME that needs some support at all times, whether it's just someone that can hold their hand or be there for them when they need it or think they need it, then it's unlikely to be a high street bank that will be the best place for that. But really, it depends on each business's own circumstances.
Good. Thanks, Josh. Right, I want to leave it there because, like I said, it's been bang on an hour. Perfect. We've never been bang on an hour before. So well done, everyone. Josh, thank you for coming on. I'm sure what we'll do is we'll follow up anyway with details, so that if anyone wants to reach out, ask you any questions, hopefully you won't mind answering them, or sort of, anyone who wants to work with you. Stephen, thank you for coming on. Really good debut. Well done. And Joe as well. Thank you as always for coming on. We'll send something out. Listen, I think that what tends to happen is people kind of digest what we've said and then come back with questions further down the line. So we'll follow up with stuff. Please, if you feel like you want to reach out, we've put on these webinars because we're here to help. So, reach out so we can help you. Don't make sure you ask questions if you have questions to ask. But other than that, thank you very much for joining, and we will hopefully see you all soon.
Thanks
guys.
Thank you.